In today's video, we're going to be explaining why Bitcoin is preparing for a major move in the next 72 hours. Alongside this, we're going to be discussing Bitcoin dominance, altcoin season, and absolutely everything you need to know about the short-term price action. Let's go ahead and dive in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be taking a look at a very important 30-day long uptrend. We'll also be discussing the high time frame range, short-term time frame price action, Bitcoin dominance, and altcoin season. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the first link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. If you were interested in taking your trading to the next level, join us on VIP, where we post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. Alongside all of this, you'll also get access to our group chats, our general chat, trading chart and education chat, news, daily video, trade setup, and help chat. If you are interested in access to all that, contact me in the pinned comment of the free channel by clicking my name, or click these links for more information. Without further ado, let's dive into a video. So starting on that market data, guys, how are we looking? 24-hour volume up 2.5% at 136 billion. 24-hour liquidations up 42.65% at 160 million. Looking at those liquidations, 107 million have come from long positions and 53 million have come from short positions. Taking a brief look at the last 24 hours of price action, as discussed in our video yesterday, we talked about the possibility for a reversal development in the short term as we had a falling wedge structure, which we did not yet have the breakout of the RSI, but over the last 24 hours since the video, we saw again the RSI break positive, we saw the price action break out of this downtrend, and we saw it break out of that falling wedge structure as a consequence. As a result of these three things occurring, we saw the price action rally up to a price of 69,500, where we have found some short-term resistance from that prior resistance zone. And we have seen a short-term pullback since then, back to retest our 50 EMA at 68,200. We'll be discussing in detail today what we expect next and what you should be paying out attention for. Moving over to the broader market, so DXY is apexing still. If we do drag up this diagonal, this yearly uptrend, along with this horizontal level, we can see we come to an apex around about the 17th to 18th of June. And this is very important as we do have some major economic events occurring before the date of the 17th to 18th of June. Primarily in the next couple days, we do of course have our PCE, personal spending and income data, which can be adjusted for leading inflation data. We've got our PMI data. We have got our job data, our NFP and unemployment rate data on the 7th of June, so on Friday. We have got inflation data on the 12th of June, which is going to be next Wednesday. And most importantly, we have got the interest rate decision and Federal Reserve press conference in relation to the interest rate decision on the 13th of June, which is next Thursday. And again, these events are going to be insanely important when it comes to determining whether DXY is likely to go. And if you notice, these events will all finish by the 13th, which is just before the apex of the zones. We are expecting a directional breakdown or break up by the time, or at least at the time, of the Federal Reserve interest rate decision. Again, looking for a directional breakdown, we are watching that RSI trend line. A breakdown of that RSI trend line will indicate we do have negative strength, we have exhaustion, we have weakness, which will increase the likelihood of a directional continuation down to 103. Whereas while we remain above the level, we do have a possibility to bounce back upwards. Again, the economic news that comes out over the next following few weeks will be heavily impactful in determining whether DXY is likely to go. If we do see a downward move on the DXY, this will be bullish for traditional assets and Bitcoin, whereas if we see this continuation upwards, this could be potentially bearish for traditional assets and of course Bitcoin. So let's take a look at our traditional asset market, looking at the S&P 500. Not too much change over the last 24 hours. We can see here we have rejected from that prior high, forming a pretty solid red candle with 21 hours remaining on this red candle. Again, guys, while we remain above our 5,000 level, which is going to be our higher low of the current uptrend, okay, and our bearish trigger point, and below our high, which is our prior high, and our bullish trigger point, we are going to be within a consolidation range. And again, this consolidation range has the possibility to result in a directional continuation into price discovery or a high time frame downtrend. So if we do break below that 5,000 level, this will be the first instance of real weakness on the S&P 500 ever since we broke down from that uptrend all the way back in August 2023. We have been showing pretty much nothing but strength this entire way upwards. Unless we break down from this level, that would result in a high time frame downtrend originating. Whereas again, a break over the prior high puts us into price discovery, and that high time frame uptrend we have been in will continue upwards. Now, a directional breakout is reliant on a weekly close. So we're looking for a weekly candle close above the high or a weekly candle close below the low to validate the directional continuation. Until then, any movement between the low and the high, although there is quite a large price range of about 7 to 8%, should be considered normal price fluctuations on the higher time frames. Only when we see those breakouts, and more importantly, the validations of those breakouts to get confirmation in the direction of price action. Exactly the same thing goes here for the Dow Jones, the difference being the price points are slightly different. We do have 40,300 as that high point, and as a low point, we've got 37,700 as the low. Again, a directional breakdown, weekly close under, results in a high time frame downtrend. A directional break upwards, weekly close above, results in a directional continuation upward. Until then, we are ranging on the high time frame, just a simple consolidation. Pay attention to the charts and watch what develops, particularly as we enter the economic data, guys. We do see some negative news come out, particularly during that Federal Reserve press conference. That could massively sway the direction of the risk asset market over the coming weeks if we do get any indication that interest rates may increase once more. Let's go ahead and jump over to Bitcoin now. A quick word from today's video sponsors before we do. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, BitGet and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the BitGet link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, BitGet and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and jump over to Bitcoin. In today's video, we're going to start on Bitcoin dominance and altcoin season, then jump over to Bitcoin short-term price action and build it up to the slightly higher time frame to discuss the high time frame range. So as we can see, Bitcoin dominance has broken down from that 1 year long uptrend. If we zoom into a really small time frame here on the 4-hour chart, we can actually see Bitcoin dominance at the moment is coming up to retest this trend line as we speak on the 4-hour candle with 55 seconds remaining on that candle close. We are actually retesting that resistance as we speak. So again, currently we are underneath this resistance, and this resistance has been officially lost. If we look at our high time frame horizontal levels, we've got two levels of significance. Number one, we've got our low point over here, and number 2, we have got our high point over here. Our low point is going to be the 38 to 40% range, and generally what we see when we enter a Bitcoin bull run, we generally see, again, at the end of that bull run, at the all-time high for Bitcoin, that Bitcoin dominance has eventually fallen toward that 38 to 40% region. If we look at the 2021 cycle during the 2019 to 2020 bear market, we held a very important level at around 56% on dominance as an area of major support, and this is going to be the bear market support level, the bear market resistance if you were looking at a Bitcoin chart. And when we broke below this level, that is when we saw the parabolic phase initiate for not only Bitcoin, but of course for altcoins alike. Now we entered a bull market during this period upwards, okay, early 2021, we entered the bull market downwards, but it's only when we broke below this level, we broke below the horizontal resistance, do we enter the parabolic phase. What we can see this time around, we've actually retested that prior support as a degree of resistance now, and as a consequence of doing so, we've also broken down from a 1 year long uptrend. This could be the trigger point for a continuation downward now on the higher time frame for Bitcoin dominance, which could eventually develop into an altcoin season. Now, if we're looking at altcoins again, for an altcoin season to develop, we need 2 situations playing out. We need number 1, Bitcoin dominance falling, and we need number 2, the total cryptocurrency market cap needs to increase in value. If both of those things occur at the same time, we will see both Bitcoin and altcoins increase in value at the same time, but altcoins will increase at a greater rate than Bitcoin, which is what we traditionally call an altcoin season. Now, if we look at, again, the historical patterns for altcoins, we can look at this chart over here. This chart is a fantastic chart as it shows us historical price action for altcoins in prior cycles. Let's go ahead and refresh this page really quickly as it has not loaded for some reason, unfortunately. So we'll go ahead and bring it back up. Really quickly, here it is, the total 3 market cap. If we look at the total 3 market cap, we can see some very important levels from a technical perspective, but also from a structural perspective. We've got point number 1, which is going to be the dead cat bounce high of the prior cycle. This extends as a major point of yearly resistance until when we do break back above it, it results in us entering phase number 5, which is the official parabolic phase for altcoins. We have got point number 2, which is going to be the bear market yearly resistance. When we break above that level, we enter a multi-month sideways consolidation for altcoins, which is going to be defined as phase number 3. Phase number 4 is the initiation of the bull run for altcoins. This is when altcoins start to perform well. Particularly, we have some altcoins outperforming others, and that is essentially the start of the bull run for altcoins. And then phase number 5 is, of course, the parabolic phase. What we can notice is historically, based on prior cycle, we are following that pattern to an absolute T. We saw the dead cat bounce high. We saw point number 2, the yearly bear market resistance. We broke above the yearly bear market resistance, entering a multi-month horizontal consolidation. We then saw a parabolic move upwards for altcoins, which resulted in large movements across the board for altcoins. But after that point, we saw a cataclysmic correction of around 30 to 60% for some altcoins. And again, this was present in the prior cycle as well as we saw that red circle representing a large correction to retest the pi cycle midlines. And then after that point we saw a break of point number 1 and entrance into the parabolic phase. So are altcoins parabolic right now? No, they are not. Are they close to a parabolic phase? They're getting close to a parabolic phase. We do need to break above that $844 billion level to see us enter that parabolic phase for altcoins. Do we have the potential to enter the parabolic phase? Absolutely we do, as we follow, or should I say, as we continue to follow the prior historical pattern that has been laid out for us. Now, what would invalidate this pattern? What would invalidate the possibility for a parabolic move for altcoins? 2 things. Number 1, if Bitcoin dominance were to continue upwards here and break through the 56% resistance, that could result in altcoins bleeding off significantly in comparison to Bitcoin, and depending on the direction of the total cryptocurrency market cap will determine whether or not they rise or fall in value. So that could be one indication that we are likely not going to see a parabolic season. Number 2 would be the big one, which is going to be a weekly candle close underneath the pi cycle midlines. If we look at the point of which the pi cycle midline indicators break out of the Gaussian channel on the weekly chart, which is right over here, exactly the same periods, okay, we can see from this point onwards until we create a pi cycle high, we do not close a weekly candle underneath the pi cycle midlines. So a pi cycle high should occur again at the top, and we would only close below the midlines of the pi cycle indicator once the pi cycle high has been in. And therefore, a weekly candle close below the pi cycle midlines prior to a pi cycle high could potentially invalidate the pattern we have seen in the last cycle and the pattern we are following so far this cycle, and potentially invalidate the possibility for an altcoin season, at least in the immediate future. So those are the two the warning signals we're kind of watching out for invalidations. Until then, the pattern is playing out as expected, and we have to assume the pattern will continue as expected. Let's go ahead now and jump over to Bitcoin's price action. So on Bitcoin's chart, again, we'll refresh the page over here. Bitcoin's chart, there's a few things I really want to be discussing. First and foremost, there is one trend line that I really want to show you guys. And this trend line is going to be this uptrend here, which is this black solid line. This uptrend is going to be now our monthly uptrend. So we've got to add a new little annotation over here. And again, I'll post this chart in the Telegram channel. This is going to be our monthly uptrend for Bitcoin. If we take a date move or a date range movement of this trend, we can see starting on the 1st of May. Currently, this is around 29 to 30 days long. So basically, the entire month of May, we have been in this uptrend, and the entire month of May, we have increased a value for Bitcoin since these lows to a maximal high point of 27% and 20% respectively from current price. So a pretty good month for Bitcoin, actually a really good month for Bitcoin overall. We've seen around 20% growth for Bitcoin in the month of May alone. Now, this monthly uptrend is a very important level, as if we drag this uptrend outwards, eventually this uptrend is going to cross over the range high. Okay, if we go to a higher time frame, it is eventually going to cross over, we can see, the range high of the high time frame consolidation, which indicates to us, provided we remain above this monthly uptrend, the price trajectory shall continue at a degree great enough to result in a breakout above the prior deviation and entrance into the macro continuation phase, which is price discovery. So this is a very important level, guys, as we just explained. If we are able to sustain above this diagonal trend line, the likely direction for Bitcoin is going to inevitably be through the range high resistance above that 72 to 73K region and into the macro continuation higher. So if I'm looking at one diagonal level right now, this is going to be the level I'm really focused on. If we zoom into a smaller time frame, we can also see this diagonal level has confluence with the major $67,000 support. Again, this is our POC slash $67,000 major support region. A break underneath this region results in the bias of the channel flipping from bullish to bearish. If we go ahead and again, delete all these annotations just to make everything a little bit easier to see really quickly. If we just look at our levels, we can see this red box and our dotted trend line. This is a major area of support, and this represents not only again the $67,000 resistance, but it represents the POC and most importantly, the exact midpoint between the range high in the range low of the 2 to 3 month long consolidation phase. So in other words, it is a trigger point for a directional continuation downwards if broken below. So if we do see a break below this corresponding uptrend and horizontal level, we could see a correction back down to 64.5K, where we'd be retesting this prior area as resistance as a point of support, where we would either bounce or see a directional continuation lower. Either way, if we want the best chance to see a continuation through this resistance, this uptrend and the horizontal level will need to sustain as support. So let's now jump down to a smaller time frame gain. What we can see over here, guys, is we do have a clear downtrend established from our buy side liquidity. Again, this is going to be our buy side liquidity and our downtrending resistance at 71k. Again, if we zoom down to an hourly chart, we can see just how significant both of these levels are. We can see this is going to be our buy side liquidity. If we bring up our liquidity index over here, let's go ahead and bring that one up. We can see this buy side liquidity right over here. And we can see our prior level of support turning to resistance right over here, resulting in a downtrend to our POC level. We came back up and retested that exact horizontal level, which is our second point of validation for our downtrend, and we have yet to retest it. So what we can say for sure, guys, is we have this triangular structure forming between this uptrending diagonal monthly level and our downtrend on our short term, expanding from our buy side liquidity, which is going to be our range high. So what we have is consolidation. This consolidation ends around the 5th to the 6th of June. So we are expecting actually in the next 3 days, a large movement to come, or maybe not a large movement, but a significant movement in terms of direction for Bitcoin. And that, whether or not be, again, a break of this downtrend, will likely result in directional continuations to these high points. A break of the uptrend, okay, could result in directional continuations to the low point. If I had to bet on one side, I am betting on the directional continuation upwards, provided the upcoming economic data doesn't come out ridiculously bearish. So guys, pay attention to one thing on the chart, and this is the whole video is for today. Pay attention to these two trend lines. The downtrend here, super significant, and that monthly uptrend with confluence of the 67k level, super important. Again, if we zoom it down to a small time frame, we talk about what has happened. Again, the breakout of that falling wedge structure. We can see we have a lot of buying pressure developing here at our base of support. We had the RSI flip positive. We've got this strength, we've got the momentum now. The buyers are back in control in the short term. The big question is, are they going to be able to push it through this resistance prior to a breakdown of that support? My answer is most likely. We have to wait and see what the economic data says. Overall, watch those levels, trigger points, directional continuations, very important stuff, guys. Let's go ahead and zoom out before we finish and wrap up this video to a higher time frame one more time. If we zoom out over here, we can see, guys, if we do break above that buy side liquidity, we will be entering our deviation. And again, guys, we do have that downtrend right over here. Very, very likely that if we do break back into that deviation level, and let's go ahead and just drag this one across again, we can see we do have, again, a resistance retest, deviation from trend, that is the buy side liquidity, resistance retest, and therefore again a break of that downtrend we just showed you would result in a break of this high time frame downtrend and directional continuation upwards. So a very, very important level to watch. We have some very key diagonal levels you should be paying attention to. And that is about it for the video, guys. I'm going to wrap it up there. I hope you enjoyed today's video. A quick update on the key levels on the short term. Pay attention over the next coming few days. I'll catch you guys in the next video on Monday. See you then.